Hi there and welcome to this video that I'm recording on Friday the 14th of April 2017. So it's a holiday for the markets, it's Good Friday, so I'm recording this video normally a day earlier than I would do it regularly. So welcome aboard. My name's Andy on trendfollower.co.uk, and in this video I'm going to look at the different asset classes that I like to track and decide whether I want to be invested in them or not. But a quick disclaimer, first of all, I'm not a financial advisor, I'm just a regular, ordinary person, probably a bit like you. So I have no qualifications in finance, I'm not a financial advisor. Please don't look at this if you're after financial advice. This is just a video about what I do, but you might find it interesting, so stick around if you like and have a watch, but it's not advice, please. So just to give you a very brief summary, I divide my investment pot up into 5 different slices: shares, property, gold, commodities and bonds. And then I use a very simple timing system to decide whether I want to be either in or out of that asset class. And I stay in it until I get a signal that tells me to get out of the asset class. So with that said, let's have a look at the first asset class, which is shares, and see whether I want to be invested or not. And I use the Fundsmith Equity Unit Trust for exposure to shares because it has a good portfolio of about 20 to 30 UK and US stocks that are pretty blue chip and have, as they call it, a solid moat around them. So they're very hard to replicate. And you can see that the price of Fundsmith has done very well. Recent weeks it's gone sideways, but the price closed yesterday at a sort of good high here. It's well above the green line, the MA52, so I'm quite happy to stay invested, so I don't need to do anything about my share investments. I'm already invested. Let's have a look at property. Now there are 2 investments that I'm tracking for property. The first one is an ETF, the iShares UK Property ETF, IUKP, and you can see I had a false signal here, crossed the MA52, fell back down again, but then rose back up above it again, and I reinvested, and the past 2 or 3 weeks it's doing well, so it seems to be rising, so I'm quite happy to stay invested in this ETF that tracks UK property. It's a fund of funds, really. The TR Property Investment Trust is the other one that I like to follow. This has a mixture of both UK and European investments, and you can see where it crossed up above the MA52. It's been very choppy. Really the past couple of years been very difficult to trade, unlike previous years where it did very nice, clean, easy signals to follow. The TR property has been all over the place recently. Anyway, I've gone long TR property a few weeks ago, and you can see where it's risen up to this line. I hope it'll rise up above it. This is the previous high, and so it'll represent a source of resistance. So it may be that if the price doesn't go up through this line and bounces back down, that could mark the beginning of a downturn, and probably we'll see. Hopefully quite the opposite. So there we go, I'm invested in property. Gold is the third slice, and I track PHGP, which is gold priced against the British pound, because if I don't have my investment in gold, the money is in British pounds, so it makes sense to track the price in sterling. And you can see that the price has been rising. It had a little dip to here, but this week it's risen further, and I'm quite happy to be invested in gold. I don't actually invest in this investment trust, this ETF. I actually invest in one that's priced in dollars and holds the physical metal, but I use this to track the price. So there we go. The graph here is telling me to remain invested in gold, so that's what I'm going to do. Commodities is the 4th slice, and I use the City Natural Resources High Yield Trust for exposure to commodities. It has quite a mix of different commodities. Worth having a look at their website, so just Google it if you're interested in commodities. It has done very well, but recent weeks it's done badly, but the past couple of weeks it's been rising back up again away from the MA52. I thought it was going to close below it, but it didn't, so I'm quite happy to stay long City Natural Resources High Yield Trust and remain exposed to commodities. And bond, of course, is the 5th slice, and I don't actually trade bonds because they chop up and down below and above the MA52 too much to make it worth going in and coming out of the bonds. So I have 3 different iShares ETFs, one denominated in British pounds, one denominated in euros, and one denominated in US dollars. And I just hold them, and of course course, one will do better than the others at some point, and vice versa at different times. But I just hold them. I don't sell them. They just remain as part of my portfolio to give me a bit of spread among the 5 different asset classes. So there we go. I'm invested in all 5 asset classes. I own shares, I own property, I own gold, I own commodities, and I own bonds. So it's all on a green light for me. So I don't need to do anything next week. I'm just going to do nothing and just let the investments sort themselves out. I'll do another video next weekend because another week will have gone by, and things, of course, could well be different then. So do have a look at my revamped website. Be great to get a bit of feedback about that. So thanks very much for watching, and I look forward to catching up with you in due course. Bye for now.